Hit it.
It's March 13th, 2020, episode 71. I'm Patrick Ceresna.
And I'm Kevin Muir. This week is a special Markets-in-Turmoil / Markets-on-amphetamines version of the Market Huddle. We have no guest because Patrick and I have too much to talk about. We do, however, have an update from Tony Greer and a Talking Chart segment with Patrick.
In This Week in Trading History, we reflect upon one seriously epic market crash and then discuss tales from the trading desk and then get into the top 3 things to watch next week. All right, let's jump into the This Week in Trading History, Kev. And I thought it was I wanted to go way back to March 9th of 2020. When the COVID-19 the coronavirus drives the biggest 1-month drop since 2008 in the markets.
Patrick, this is going to go down in history as one of the most epic times. Yes. And all you have to do is look at the kind of this reaction, how quick it was to realize that it is going to be something that people will be talking about for a long, long time.
It is. And so we wanted to kind of look at real history, but I'm going to actually spend a little bit of time looking at past market crashes in comparison, and then we'll actually look at this market crash and really kind of put it into context. So let's dive into it on these charts. And so I wanted to compare it all the way back to 1929, 1930 when using this as a Dow Jones chart and when it was leading up to that Black Tuesday. But what I wanted to really identify was the magnitude and the duration of the initial phase of the bear market back in 1929. And what's fascinating is that even in 2 months, the market wiped out 45%. So it's actually much larger percentage-wise. But it was that one sequence that started about halfway through in October of 1929 that led to about a 10-day market drop of about 37%.
Yeah, that was a bad 10 days.
That was a bad 10 days. And what was relevant here is I just wanted to kind of compare. Okay, first of all, it was a much bigger bear market. It ended up actually being a Great Depression. But it started this way. And it started with a 2-month market crash. And within the 2 months was this 10-day sequence that had this big 37% market crash. So next I wanted to go to the 1987 market crash here, Kev. And that one from top to bottom, it took about 2 months to play out. Or just over a solid month. It was a little less than 2 months. And it was about a 36% drop. But really, even though the peak price happened back in like August, it really started in October. And when that little peak happened in October, in a span again of about 10 days or so, the market wiped out 34%, including that one day that was that 20+% drop. That was just that bloodbath, right?
Right.
And so again, it's interesting to look at from time frame. So then I didn't show 2000 to 2003, but I wanted to fast forward to the 2008 market crash. And I didn't show again the entire bear market, but I wanted to just compare the magnitude of the drops during the ugly drop phases of the market. And so after consolidating over the summer of 2008, began that August-September peak and rollover. And over a 4-month span in 2008, between August to November, you had the 43% drop in the markets. But again, you had this little sequence going in middle of September and ended in October of 2008. Was the span of it took about 3 weeks, and it was a 35% drop in about 3 weeks.
Yeah, that was an ugly period.
Right. And so notice a pattern, right? You're talking 35 to 40% numbers, 36 to 34, 37, 45. Like we're talking about the average length of these really ugly phases. And so you go today, and in 3 weeks from a peak price, we dropped 30% in 3 weeks.
Right. And that's, Patrick, the most amazing part about this move. Ryan Detrick on Twitter had a chart where he talked about this was the fastest bear market ever. And what he did was he highlighted the Dow Jones Industrial Average, just because I think That must be the data he has. But he talks about how many trading days to reach a new bear market from the period of the previous high.
Right.
And he talks about the fact that if we go back and you look at, let's say, October 19th, 1987, that was 37 days from the high. October 24th, 1929, that was 37. The previous one was 38. This one is 37. And then July 15th, 1896 was 36. And the interesting thing was this bear market, which was basically from March 11th, 2020, took only 19 days, Patrick.
Yeah.
It was unbelievable how quick it went from a full-on bull to just carnage. And that was the really unusual part about this. And I would say that it's different. And I guess we can get into this, why it's different. And I would contend that this is different because it is not really a financial crisis as much as it is a humanitarian crisis.
I'll push back on that.
Okay, so we can have this discussion because absent the flu coming, I don't think this happens.
No, but okay, every bear market ultimately needs a catalyst, and it just so happens the coronavirus was the catalyst.
But the other catalysts were all catalysts from financial conditions. They were from the Fed raising rates too tight or a shock from a trade issue. It wasn't like this in that it was a human issue.
Well, you know what? The market always has to deliver it in some form of a shock to the markets, right? And so it just so happened the coronavirus, yes, it is obviously not a financial issue that triggered it. But what I feel contributed a lot to this is the nature of how the markets have evolved, and particularly the fact that we're so interconnected on the internet, and everyone is a junior technician, and everyone believes that they'll have time to get out of the market before everyone else. I think that because everyone has now got an update on their phone, the market is actually much faster in what things happen. Back in those other crashes, half the time people were waiting for their newspaper to come in overnight for them to read the headlines and then make the reactions the next day. Everything is so fast, so instantaneous today that I think that this is just a byproduct of the fact that everybody was on the wrong side of the boat on this one.
Yeah.
And
sorry.
And when
Go ahead.
And when it exploded with this information, someone yelled fire in the nightclub all up, and everyone ran for the exit door at once.
Okay, so
you got the trample.
So Patrick, I will agree with you that the stretch nature of the markets made it worse. There's no doubt about that, and I'm not going to deny that. But there was someone 2and20 Devin is a guy on Twitter, and he had the best kind of quote about this. And he said, 2008 was a financial issue that caused human stress. This is a human issue driving financial stress. And I would contend that part of the reason this was so bad on the financial side was because government officials didn't understand it until the crisis was in front of them. And so I really think that had it been handled correctly, that we wouldn't have needed to have this financial crisis. And I know I'm going to get a lot of pushback.
Yeah, that's nonsense.
I'm going to get
stop.
Yeah, I'm going to get a lot of. But listen, you just wait, and we'll see how this plays out in terms of if they throw the kitchen sink at this. And I suspect, Tony, I believe is going to say something to the effect that. He thinks that this bear market is still got a long way to go. And I would probably guess that you're in that camp as well, although you're looking for a bounce. You don't think the ultimate lows are in. And that very well could be. You guys, I'm not going to say you're wrong. But I contend there's also a chance that they throw the kitchen sink at this from a monetary and a fiscal side, and we're blasting to new highs.
Jesus.
And I'm not saying we're going to, but I'm just saying don't discount that possibility.
Oh, Kev, listen, I am going to discount that because the thing is that you can't get yourself into a situation where the market is going to be able to be stimulated to rally in a period when the economy has to go through a timed recession. In other words, there's a lockdown periods for weeks and months where this coronavirus has to work through society. The people are going to
Patrick,
spend
I do
less.
I completely agree, Patrick. I will not dispute the economic effects of what is going to happen one iota. I will, though, say that stock prices have become unhinged to fundamentals before, and that they could again. And I'm not saying it's gonna. I'm just saying that you guys are convinced there's zero chance, and I'm saying there's a chance. Now, listen, I might be like Dumb and Dumber, like saying like, oh, this is like, so there's a chance, and that could be. But it wouldn't surprise me if we're back up 20% within, I don't know, like, why don't we put bets on it?
Listen, I'll tell you what. Let's wait till we're talking charts. We'll put up a chart and we'll make some bets.
Okay.
All right.
Sounds good.
We'll do that in just a moment. And nonetheless, this is an epic moment in history. We'll be talking about this market crash for decades to come. And you're absolutely right that it was driven by a social driver versus a financial driver, but it is still a market crash, and it was ugly, and a lot of people got hurt. And the question is it a beginning of a new bear market? That's something me and you will be debating for many months on this show, and I'm sure we're going to be pushing back on each other all the way. All right, so let's move on. Time for the rest of the show. Lena, hop on. Let's talk beers.
Hello. Unfortunately, I couldn't get us sponsor beers this week since we're traveling, or quarantined rather. So we're going to have to...
Actually, no. Some of us are traveling, right, Kev?
Yes, I am in the good old United States of America, and I am having a beer. I'm having a Schiltz. Is that how you say it? Schiltz, which I think is not a beer. It's really a diuretic.
Well, you know what? I'm doing a little blast from the past. I dug up in my fridge from one of our past sponsors, and I thought it was so appropriate. It's been in there for a while. It's the Market Brewing Co. It was the Bear Hug IPA, that 7% strong beer. We've had it before, that orange can, if you remember.
Oh, well, that's great. Good for you, Patrick.
I thought a Bear Hug.
Yeah, you're self-quarantined because you've been hanging out with Trudeau's wife, have you?
Yes.
That's what I thought.
All right. Lena, who's this week's Market Huddle sponsor?
What?
Oh, aren't you supposed to put in the Koifin?
No, I said Koifin's going in before talking charts. We just talked about this.
Let's just leave it. We're not cutting any of this, folks. Okay, nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in this show. Side effects of too much Market Huddle may include forgetting all your lines, reading them off like you're Ron Burgundy, or just laughing hysterically because you've had too many beers when you've started.
All right,
okay, let's get to it.
So joining us now on this amazing day is Tony Greer with his regular monthly segment of Navigator Launch. Tony, how's it going, buddy?
Hey, it's going great, Patrick. Thanks for having me again.
No problem. And so what a day. Actually, what a week! What a last 3 weeks from when we had you on the show last time. I mean, it's been just a historic week. And how do you size it all up? I mean, we had a big bounce here at the end of the day. Do you think that's it? Is there more? Are we in a bear market? Give us your read of the situation.
Yeah, you touched a lot of good points there, Patrick. I think it's important first to note that we're still, we are in bear market territory. And, even though they try to decorate this close, it looks like above it, we're still below the 2,700 bear market or so territory. We're still below. For me, I'm really keying on February's outside month of price action. And since we sort of carved that low of 28.50 in February and then carved the new low through the February low. We haven't been able to settle back above the February low at 28.50. So this is really not a very good close to me, all things considered. Coming into this week, Patrick, we were trading up around 2,900, and the whole thing collapsed. So, this is probably just a little bit of recovery from the deepest panic that we saw, I would say, a day and a half ago when the NBA and the NCAA were simultaneously shutting things down, sort of signaling to everybody that they need to go buy toilet paper. Right. So all of a sudden, everybody went berserk on that sort of headline. And that was the sort of peak panic that we saw in yesterday's price action. And unfortunately, I think for the markets also is that we heard all of the, all the king's horses and all the king's men speak their piece about what they were going to do about this, this divot that the virus is going to leave, meaning, Lagarde and Trump. They all said their piece today, and the markets kind of, in my opinion, gave it a Bronx cheer and just kind of turned the other way. If this was going to be a real sort of momentum, psychology changing momentum rally, I would expect to see even bigger gains on the board coming off the lows than the Dow up 2,000 points and the S&P up 200. I really would expect it to be even bigger. So, it was a lot of a last minute rally, and I got a feeling that we run into sell pressure eventually when we see, more and more cases spread across the U.S.
Right. And what's your read on that monstrous spike in volatility? I mean, we haven't seen a print when we almost got to 80 vol on the VIX. We've surpassed basically every spike other than 2009, 2008. What's your take on this volatility? The reading here.
Yeah, well, volatility had been suspiciously compressed, for quite a while. Obviously we had the episode going back to the XIV blow up, right? Like that was the beginning of the tale that started telling us that volatility is totally, improperly priced. It's way too cheap. Then we saw a replication of that type of price action as we had the fourth quarter of last year, where markets just sort of marched very orderly fashion higher, with the VIX just crumbling around the 12 zone. So now that sort of everything has been overstated and squashed for so long again, and we've got some real dangerous sort of headlines across the tape in the black swan of the coronavirus, in the, enormous repo numbers that we're putting up every day. To me, this is the volatility market saying, okay, we see the repricing across the board. We see the repricing of high yield credit, and the equity market volatility is going to have to reprice accordingly, until we see this whole entire virus downside shake out.
Well, so what's your thinking here on some of these commodities? I mean, crude oil, unbelievable move, and like gold had a big reversal. Like, how do you size up the entire commodity market?
Yeah, I don't have a strong opinion on oil. I think it's really super dangerous to trade. I'm not the kind of trader that can short oil down here around the cost of production. So I'm not confident enough at the moment that there's going to be a outsized bounce very soon. So I don't really get excited about the oil market right now. I'm kind of just observing in awe, and seeing what's going on with the price of Brent, and then watching the, the Russia-Saudi Arabia feud erupt in the wake of it. I'm not smart enough to have any idea how that's going to pan out. My sense is that the cure for lower prices is usually low prices, and, the consumers come out of the woodwork and start consuming. So we'll see if that's the case. But in gold, like I tweeted out all the time, when gold gets cracked, gold in times of a 5-alarm macro fire, gold is just another line item on the fund's P&L that they've got to get rid of. So I mean, I kind of understand that, in the all-out risk-off move, that gold was going to get a little bit of a beating because, I put out another tweet the other day that, what's the safest asset on the board right now? My idea was saying get to cash and that I like dollars. And a lot of people came back to me and said gold. So that was a clear point that, the market's probably pretty well loaded long. And for the right reasons now, central banks are going to throw more stimulus, at this coronavirus now. And who knows if it's even going to have any effect. But, the fact is everybody is back to currency dilution. And I would imagine that is going to have a sort of positive effect on gold over time, even though we deal with these bouts of it being overly long in the position column,
That's right. Now, How about your take on what happened in the bond markets? I mean, we saw I think it was spot 36 yield on the 10-year. Like, was that the bond blow off?
Yeah, I mean that looked pretty exhaustive. That's a pretty deer in the headlights move for the normal U.S. bond trader who's obviously never seen those levels. I'm barely qualified to speak about the bond market. Having thought twice over the last couple of years that it was topping out, so I'm not really the guy to talk to. I sort of keep my risk there tight, and then having been wrong, I keep my mouth shut now. So, in uncharted territory, Patrick, I feel like I need to continue to keep my mouth shut in terms of an opinion on yields, rather let them sort of give me a path as to what direction the market might be going. It looks to me like the bond market peaked first with that low in yields and then backed off. And then the stock market followed it to a low, and then sort of bounced off of that low. And right now it seems like we've just, sort of done a little bit of retracing to the middle of the range, and we're going to decide, what's next as the headlines guide us.
All right. Well, how about we just have you leave us off with just reminisce a little bit about your past, and like when you look at this market crash that we just witnessed. I mean, you've seen a lot throughout your career. How do you compare this to other things? Like, do you have anything that comes to mind about how this whole thing developed?
Yeah, we're still in the holy shit phase, and we haven't gotten to the superlative phase, which is sort of that's how I gauge the comments that I have with my clients. When we're going down, when we're still looking for a bottom, people type in OMFG and OMG, and like they're still in that I'm in shock at what's going on phase. Once they start coming up with metaphors as to how bad it is, then I'll know that we're getting to the bottom. You know what I mean? Right now, everybody's shocked at the price action. If it goes down another 20%, I'll start hearing metaphors like I heard literally around the bottom of the great financial crisis move in the S&P, literally around S&P 700, when my buddy called me up and I was like, well, what do you think now? And he said, it's going to become so that admitting that you own a stock is going to be like admitting that you have syphilis at a New York City cocktail party. Right. So we finally got to the phase where it got so bad that people had to put a title on it and a name on it. And they had to literally figure out with a metaphor how bad it was. And then once I hear that, then I'll know that it's time to buy. But right now, everybody is in the oh my God phase. What's going on? So I'm still expecting to go lower, Patrick, to be totally honest with you. That February outside month was bad.
Oh, it was. Well, listen, thank you for joining us to give us your monthly update, and look forward to hearing an update from you next month. But enjoy the volatility, buddy.
Yeah, good luck to you guys too, and thanks for giving me a chance to air my thoughts out here. That's really cool of you guys. Have a great weekend.
All right, thanks, bud. All right, cheers.
Take care.
The sponsor of this week's Market Huddle is Koifin. Koifin is a new platform that gives you professional-grade data and tools to analyze stocks and understand macro trends. It's a personal Bloomberg terminal for those who don't have $25,000 a year to spend on a Bloomberg. The best part, it's completely free. Go to koifin.com today. That's KOYFIN.com.
Tales from the trading desk. Kevin, I figured we might bring this up because I wanted to just reflect upon some of the past experiences. Both of us had the privilege of being in this industry for 20 plus years. You've been in the business for 30 years, but only 25 years of mistakes.
No, Patrick, it feels like 35 years of mistakes.
Well, you haven't updated your little line on your
my logo. Yeah, I've done extra mistakes for extra years, buddy. That's how I feel these days.
Yeah, there you go. But I wanted to just take the time to reflect on some stories of some of the carnage we've experienced in the past. And so I was thinking of sharing one idea, but I wanted you to start off and just when you're in this crash and today, think back as to a story from one of the past ones that comes to mind.
Well, Patrick, I got a whole bunch. Like I remember when I was the institutional equity derivatives trader on the bank during the long-term capital crisis. And we were short gamma, meaning that we were like those option makers that had sold the puts. And on the way down, we were getting plugged with other kind of institutional market makers that were also short gamma, and they were phoning us up to sell their deltas. And so we were bidding for baskets below kind of the last, like a big discount, and we would buy it from them. And then after selling it, we realized that our delta was growing so fast because of all of our short gamma that by the time it got there, we had to sell more, and it was just feeding on itself. And we hit this point where we were down so much and the market went no bid, and we realized there was nothing to hit, Patrick. There was just no liquidity. And we said to ourselves, well, if we could sell down here, but it doesn't make any sense. So we basically turned off our machines.
Yeah.
We just turned them off. We actually had to look at the spreadsheet. That's how funny it was. We were running it on an Excel spreadsheet. They used to call these kind of derivatives traders Excel monkeys, F10 monkeys, because that was the recalculate button. And we just hit this point during long-term capital that one summer day, and I remember quite vividly in my mind that it hit this point where we were long all these stock index futures, and we should be selling them. And we said, there's no point. If we sell them, we're just going to make more kind of positions for ourselves. And we just turned it all off and waited to see what happened.
Yeah, it's absolutely nuts. And, what the story that I have that it reminded me of was when I saw that gap in oil and the carnage that happened in some of those oil stocks. Some of them, like major stocks, like let's say Occidental Petroleum here, wiped out from trading at like $40 in February to hitting a low of $9. And just this complete carnage wipeout. That gap, though, was what brought back a memory for me, Kev, because I remember on the trading desk taking in an order from a retail guy who was buying Nortel back when it hit a peak of like $120, and he was all in on Nortel. And it was down to $90, and he calls up and says, "How many more shares can I buy on margin?" And it's 3:30, and Nortel's coming out with its earnings after the closing bell, and this guy was so sure that Nortel was going to have a blowout earnings and it was going to recover and he was going to make his money back, and he just wanted to go all in on his certainty that he was going to make that money. And I remember that feeling because I actually was so sure myself that, like, I had hedges, but I was so sure that energy stocks were cheap. And it's like it's a deja vu of that event. And he bought all the extra shares. He was loaded to the tilt. And Nortel, the market closes, Nortel reports the stock goes from $90 to $60 in one gap on its earnings. And the guy gets not only zeroed, but he has a negative balance in his account the next morning. And he starts meeting it with the margin calls. With a line of credit. He starts depositing money to hold the line, and he even lost that too. And it was devastating. And I look at that oil drop, and it's like, man, somebody got zeroed on that.
Oh, Patrick, for sure. Well, this whole week, and really, the oil shock was actually the start of it. But it's been not just oil. This has been happening in bond markets, in credit markets. It's been a crazy week, and I guess why don't we
we'll talk about it in the talking charts segment. But any other story that comes to mind, or are we ready to move on?
No. I remember 2008. There's I have a pal that ran a index derivative desk at a big Canadian bank, and they had all these swaps that were supposed to be tax trades, meaning that there was supposed to be no real exposure. It was they were long the stock and somebody else was short the stock, and it was basically just a way of kind of making the tax most efficient by putting the dividends into the holder of the Canadian entity that would be able to gross up the dividends. Well, unfortunately, their big trade was with Lehman Brothers. and they had done these trades, and they thought that that Lehman was going to go under, so they had gone and unwound it in a quick little fashion. But what had happened was they had done the trade, but it hadn't yet settled, and they weren't sure whether they were going to be able to actually deliver on it. And over the weekend, in between when the swap was closed and the trade was supposed to settle, Lehman went bankrupt, and it ended up being that what happened to the dealer was that they ended up being long all that, and they had to sell almost $1 billion of Canadian equity exposure in the course of an afternoon, obviously in a down market. And I still remember watching quotes that were just absolutely insane. And to me, that was probably the most inefficient, scary market that I've ever seen that afternoon in Canada, because it was an amount that nobody could take, and there was nobody that was willing to bid for that sort of size, and people were truly scared. Yeah. We did have some times during this last little bit that kind of felt similar to that, but nothing to me kind of compares to that one day in 2008.
No, thanks for sharing. All right.
Talking charts. We got a lot to talk about, Patrick.
We have a lot to talk about. It's, there is no shortage of things to talk about, but nonetheless, this episode is brought to us by Koifin, right?
It is. Rob's product is absolutely terrific. You know what? I've been noticing more and more people have been sending me charts and sending me kind of different studies that were done on Rob's product, the Koifin product, and it really actually warms my heart to see people using it. I hope, I wish him nothing but the continued success, because it's such a powerful, terrific product, and I really highly suggest anybody that's into the stock market or macro, go check it out.
All right, so let's talk charts. And let's start with the S&P 500. No brainer to start there. But what a crash. But, since I had that chart updated earlier in the history part, we had a pretty strong close here at the end. We traded as low as 2,500 intraday and closed up here at 2,700. That trend still continues. I was talking last week how the average daily range is over 150 S&P points, and that continues. There's a reason volatility is north of 70 the majority of the time now. It's just that's like the right price of volatility when you have this kind of swings on an intraday basis, right?
For sure. I actually wrote a post about this, Patrick, saying that VIX at these levels should really be 60, 70. Yeah. And we actually have now finally, because I argued at the time VIX was 45, and I said it's actually cheap. And the reason it was cheap was because a lot of guys like the old 50 center, Mr. 50 cents, that bought all those VIX calls, they were monetizing it and keeping VIX actually below where it should be. I think we've now hit the point where it's probably hit the obscene number on the VIX, and it's difficult to justify owning up here, because these moves won't continue forever, Patrick. We're not going to continue seeing, 180 to 200 point S&P days. We will eventually settle down. I can't wait for those days, because I haven't been sleeping very well. It's been a tough couple of weeks, and in terms of the volatility, even both ways, even on the up and down days. And one thing I've learned from this, Patrick, is that you were telling me earlier how you slept like a baby, and I was kind of cursing you. And I guess that's one of the benefits of being long volatility and having always having your hedges in place. And hats off to you, Patrick, because you're in much better mood this past week. And not only that, I did a little more Market Huddle preparing because I was busy trying to put out fire after fire.
Yeah, but what is interesting is one of my market calls throughout the week was that I actually thought we were going to see the swing low, not the major low, but the swing low this week. And I think we've seen it yesterday. This morning we kind of retested it just to establish the low. But now that we're 200 points off of there, we could see that retrace. What's interesting was I was reading Charlie McElligot's piece over there at Numara, and there is some, I think like $500 billion of March 20th expiration short put delta. Or long put delta, on the books, and so as everyone starts taking profits on all of this, because with this kind of high volatility, it's incredibly hard to roll it, right? And at some point, they're going to monetize it, and all the dealers are going to not have to be as short as much SPOOs as they have been, and that actually can provide ample buying pressure on the very short term from just a short-term liquidity. That's not a major market driver, but I mean, I personally still will stand by. I would not be shocked if we're back towards 2,900 early next week.
Patrick, I wouldn't be shocked if we were there on Monday, the rate we're going. Not only that, Patrick, we haven't talked about this yet, but I really think that there was a dramatic change yesterday and today on the part of government officials. And so far, a lot of people are just talking about market action, and they're not thinking about what's really driving that market action. And the reason that it's kind of been, these programs have been kind of, let's just say, put off to the side, is because the fear from the virus has been so huge that kind of has been taking all the headlines. But if you step back and look at what both the ECB did and what the Fed did, these are truly monumental changes. And I would argue that the ECB especially is a huge, huge deal. Let me just tell you a couple of things. First of all, they did not lower interest rates. And this has been my pet peeve for how long have I been bitching about this, Patrick?
Why don't you save that for when we talk about them? We're going to do our top three things from last week. We're going to talk about that ECB.
Okay. Well, why don't we do that then? Well, I'll save it. I'm sorry. This shows you how well we prepared.
No. Listen, you're absolutely right though. Like they did do something different. And
you're right. And so my point is that when you're talking charts, we can talk about this and we can pick levels. But the reality is that there's been some huge fundamental changes. And I think that the market is I hope I don't gooch her by saying this, but I really do think that something changed yesterday from the fundamental side. And I'm hopeful that the fear will be kind of finally, squelched, and that we might be able to get into a more kind of normal market. But why don't you keep going with your talking charts?
Listen, you got? But just to conclude, I had a lot of pushback from a lot of people that are so worried about what happens with this coronavirus, that the virus itself is driving their psychology. But I honestly think the market will turn before there's a shift in that. I think that those people that are watching the headlines and the corona are going to get caught on the other side. But anyway, I wanted to talk the euro because we have a little bet going.
Oh my God. Yeah, you know what? Okay, so why don't you give us the backstory. So
the backstory is that you guys cornered me.
So you got to say who. It's me and Cuppy.
You and Cuppy were on about 115, and I thought that you guys were talking nonsense.
1 second, Patrick. You're doing a terrible job telling this story. Let's just go with the background. So Patrick and I, one time we were talking to Cuppy, Harris Kupperman, on Cuppy's Corner, and he basically picked off Patrick on what I thought was a very cheap option. It was called a one-touch. If it hit 115, it was going to basically be Patrick was going to buy Cuppy and I stakes. I still feel a little guilty.
In Miami.
Yeah, right. I still feel a little guilty about it because I felt like that I should have been supporting my partner, and instead I was seeing the bad price, and I basically, the trader instinct jumped all over it, and I basically took it. So now, for a while there, Patrick was talking smack when it went down to 108 or something.
I was offering you a bid to close.
That's right. And so it was looking like he was talking smack. And then when he starts talking smack, the market gods go, nope, screw you. And what happens in the case of 2 weeks, it goes from 108 all the way to 114.95. Now, I want to tell you something.
Save me.
Yeah, I want to tell you something. At about that point, Cuppy sent us both an email saying, this is typical Cuppy. He goes, I'm getting my fucking face ripped off on the tankers, but at least my steak is going to taste good, right?
He goochered it.
He goochered it like nobody's business. The market god did not like that either, and decided that not only was he going to punish you for talking smack at 108, he was going to punish Cuppy at 114.95.
And you're just the victim. You're just the victim.
We literally missed it by 5 pips. And Cuppy, I hope you've learned your lesson in terms of never ever tempt the market gods.
You know, it's another
more
one.
Respect to it.
No, and a perfect example of that is Deutsche Bank and the steak dinner that I still owe you for this ridiculous shoot to above 10. This is complete nonsense. Like, I mean, it went gapped above 10, and you do your victory lap, and then collapses.
Hey, listen, I was very humble about my win. I was. You were the one who kept pushing me. I didn't even want to bring it up.
You know what? I can't wait to see you in the Market Huddle menswear, dude. Like, because you know what?
Hey, listen,
if I'm going to buy you, I'm buying you the steak while you are waiting, while you're wearing that.
Listen, do you want to renew the Deutsche Bank bet from here? Because I'll do it again. Oh. I love it down here.
Oh, Jesus.
So it's $6. Why don't we do?
No, because it's oversold. I want.
No, fair enough. I'll give you some extra juice.
No, I'll tell you what. We make this bet in 2 weeks. Let everything calm down. Let's see where it is.
Patrick, listen. This is what I'll tell you what. I'll take 10. You take 3.
I don't want 3. 3 is
what do you mean?
Is more than a 50% drop from the current level.
Okay, I'll give you 3.5 versus 10.
No. I don't want it.
4.
I don't
4 is
want
my
your
last
business.
one.
No, I don't want it. I don't want it. I don't want it. I'm not doing it.
Okay, one second, Patrick. I'm telling you, there's going to be a lot of huddlers.
Okay, I'll do it for a burger. I'm not doing it for a steak. I'll do it for a burger.
4 before 10. I think a lot of huddlers, the bearish huddlers in the group, will be very disappointed that you didn't pick me off there.
No, you know what? Listen, because I don't. It doesn't feel right. I'm not after the thing collapses from 11 to $5. I'm not gonna go and start putting on a trade that it's gonna go and get halved again. Fuck that.
Why are you kidding? That was the right trade the whole way down on the coronavirus. Every time things seem cheap and that they seem like you should buy them, the right bet was to keep pushing the bear trade. And this is the amazing thing about this market, Patrick, is that that was what was more unusual about this is the relentless nature of the selling, and how every time there was all sorts of things, like we had Jason from Sentiment Trader on, we had hit levels that were very oversold, and for all intents and purposes in previous history with any guide, they should have bounced and they didn't.
Yeah.
So the bears will probably feel that. Anyway, so what do you got next here? You got the
Well,
USD,
I just want to go back to that yen, right? Like, I mean, obviously the funding currencies were a big thing, but the U.S. dollars is suddenly on fire. I mean, Dixie's almost at. I mean, it's definitely north of 98. I mean, stone's throw from 99. It's like it was the single biggest whipsaw, and you see it like here. The yen went from 112 down to 102, and then like now back to 108. Just amazing volatility in the currency thing. I mean, are you still pretty hell bent on a dollar bear?
So no, I'm not. I feel like that $1 bear move was what I was kind of expecting when the liquidity was sent. I'm not sure, Patrick, how I would feel right now. I think a lot of things have to settle down. I have gun to my head. I actually think the next move is probably up in the U.S. dollar.
Yeah.
I do think that longer term that we will see a move out of U.S. assets, and that we will see the idea that U.S. assets are over-owned. I'm on the other side of Brent. Brent's kind of milkshake theory is that this is going to get a lot worse and that the trade is just beginning. I would argue that the trade is very full and it's ending. And I guess that's where we disagree, and really you won't know until we see it. But it's been volatile either way, Patrick. It's kind of going around. So I just hope it settles down a little bit.
So I want to move on because I just love hearing you shit on Bitcoin. So what do you know? Bitcoin goes from 10,000. It's almost like it's an equity. I mean, the thing wipes from 10,000 plus. I mean, it hit a low of 4,000.
I didn't realize that. You know what? I don't watch it.
It collapsed the whole market.
It's actually shocking. And one of the things.
Oh yeah, you're shocked, I'm sure.
Yeah, well, it's shocking that it's still $3,800 away from fair value. Or sorry, what's the price of it? It's $5,800. Where is it? Oh, yeah,
5,200.
58. So it's $5,800 away from fair value.
52. Can you need glasses?
I do need glasses, Patrick. I'm getting old. And anyway, so the long and short of it is that one of the things that Bitcoiners should be aware is they got all excited when all these institutions started buying Bitcoin. The last thing you need is those kind of institutional mopes owning your product, because when the liquidity comes, they're all selling. And this is something they learned. I remember Don Cox telling a story when they wanted to make a GLD, the gold ETF, and he argued vehemently against it. I think he went in front of Congress and said that they shouldn't do it. And the reason he said this was he said something to the effect that if you make it tradable like a stock, it will become a stock when there's no liquidity.
Okay.
And I feel like that's what's happened to Bitcoin.
Sure.
Bitcoin has become, in essence, just another asset.
I think Tom Lee just keeps Gucciing it. Like every time it's going up, he comes out there with his 40,000 Bitcoin call, and it just starts going down instantly. Like you can literally fade him, Dennis Gartman style. Anyway.
Well, I think you could fade anyone that gives you the blue ticket on the Bitcoin. And you know me, I'm just such a bear. But I didn't realize the carnage there. That was quite surprising.
It was ugly. It was ugly.
Yeah.
All right, so I want to talk. We have so much. We want to talk gold. We want to talk bonds. But before we do, let's talk Canada. I want to just touch on obviously the Canadian dollar. Bank of Canada just cut 50 basis points, right? And the Canadian dollar is just collapsing. U.S. dollar is ripping to the upside. But I think 140 is a short-term top. I think this is. Well, look, I'm bearish the Canadian dollar. But I think that this is overextended, just like the stock market, to the downside. And I think the reflexive move is for it to backfill this. That's why I'm not a big fan of putting on a Deutsche Bank bet with you, because it's the wrong moment to do it. And so I don't know. What do you think? Is that an overshoot?
Well, Patrick, for a long time I said I think the most kind of the currency that I was most bearish on was the Canadian dollar. The second one was the U.S. dollar, and I continue to think that Canada is going to have a lot of troubles. This oil thing is going to be a huge deal. We're gonna find ourselves into a lot of issues. But you're probably correct that at this point it's getting late.
Yeah. I just pulled up the Canadian TSX, and obviously Canadian energy stocks are just being lambasted. But what's interesting is that drop was more or less in line with the S&P. I mean, S&P dropped.
No, but that one day, Patrick, the one day we had the largest decline since 1940.
Yeah.
It was some monster number. Like this is like.
Yeah, but it still was only catching up to the U.S. market. That was a 29.52% drop. So you wanted the 30% drop. So so on a relative basis, all we did was just mirror on the Canadian TSX what happened in the S&P. On a percentage basis, that's what it was.
I think it was more orderly in the States, and it was actually spread out over more days. If you look at ours, we had a lot of J's chopping around. Yeah,
it shit to bed in one shot, and Canadian banks just got completely blasted. I'm going to use BMO as the victim because it had one of the biggest percentage drops. So I want to pick on the nasty one, but like, thing went from $105 down to $60. But I mean, even all U.S. financials. I mean, the average U.S. bank, like Bank of America and Citi, they're all down 40% in like a couple of weeks. 40%. Like that is, wow, right? Like
Patrick, it was brutal. Like it really was. Like this was a crash. Like for those young people that weren't around in 08 and are just new to trading, just be aware that you've just seen history, and people will be talking about this for a long time. These were crazy moves. A lot of guys were blowing out. There was a lot of market moves that made absolutely no sense, and you're going to look back at charts and you're going to go, "That was nuts." Yeah. You know, like it. And I don't know if the Canadian banks are them or not, because the real question is, did they ever deserve to be there in the first place?
Yeah. Now,
here we go. Bonds, my nemesis.
Yes. I mean, on an intraday basis, we hit spot 36. I don't know what kind of a fool would be short bonds during all this, but
thank God that fool was. You know what? The fool actually listened to you and was actually long puts only, so I didn't have the straight outright.
All right, good for you.
Well, yeah, good for me. I only lost my put premium. I don't know what to buy bonds here, Patrick.
Okay, yeah,
listen,
yeah. Okay,
you guys are correct. You guys are correct. You guys are absolutely correct that it ended up working. It ended up saving you guys. It was actually terrific. Those doing risk parity, it ended up being a great trade. It did save you. I would have never thought in a million years that this would have caused the long bond to do what it did. I wrote a piece this week that showed the yield curve in 2011 when the U.S. 2-year rate basically hit zero. And at that time, Patrick, the 10-year was 1.5%, and the 30-year was like almost 3%. Yeah. And the reality was, at that point, people still thought that they could make inflation. We have hit this level where so many people have become so convinced that there's no way that we can ever hit inflation that we've made it so these assets cannot possibly offer any real return unless you get a greater return.
I'm going to get a violin to freaking listen to your rant.
Listen,
this is the same rant you've given.
No, you're absolutely correct, Patrick. Patrick, I 100% agree with you. I was dead
And one
wrong.
day you will be right. I'm telling you right now. Listeners,
Patrick,
listen, you'll be right one day. But the thing is, you were too early for years.
Patrick, I 100% agree with you. There is no doubt. I never expected all you guys to take bonds to where you took them. I'm just absolutely flabbergasted that we have.
When you think about it, what it really is about funding government spending. Then you realize that it was destined to come here anyway. But you don't have to take it here, because when you're buying a 30-year, you're convinced that you can never go and make a kind of inflation. It's not the government buying the 30-year that's causing it to go to 1%. But anyway, it's all the people that are chasing the 30-year. It's all about convexity. Like they're just looking for where they can get the juice. But what I wanted to point out was like that what happened in the corporate bonds was epic. Like because the investment grade corporate bonds were tracking the treasury bonds like there was no risk, and at Big Picture Trading, we put on that ratio put spread on the downside, buying huge tail gamma on the downside of this corporates, thinking that the credit spreads were going to blow out. Boy, did that come in! What a collapse in junk and in investment grade. It just went from risk on to risk off in like 3, 4, 5 days. It
really did. You know what? You compare this to the stock market.
It started on Monday. Literally, the stock market's been tanking for 3 weeks.
Thursday.
It started Monday.
Yeah, this was all.
It was oil. It was oil. It was the oil gap because it was at that moment.
I 100% agree with you, Patrick. That was the deflationary shock that basically started all of this.
Yeah,
I 100% agree with you. And people dismissed, didn't understand how important that was. And I wrote about it.
Well, they did when they watched their P&L getting ripped to shreds. They realized how very important it was.
Because that basically was a deflationary shock, and especially when you saw that the fiscal and the central banks didn't understand and they weren't ready to offset it all. And today what's interesting, Patrick, is that Trump said he's going to fill up the SPR.
Oh, there you
go. The special, petroleum reserve, and it makes sense. And if you think about it, why wouldn't they do that? Why wouldn't you print U.S. dollars to go and buy oil?
Oh yeah.
Anyways, but I 100% agree with you, Patrick. A great trade, good for you guys that you bought that. I knew we were in trouble. I felt that there was one day, it was Monday or something. Credit went no bid, and just shit got real. That's what happened that day. Shit got real. I knew there was I remember you talked to me and I was like, Patrick, stuff has gone no bid. And it was, the stock market is one thing, but when the credit market seizes up, that's when the real bad stuff starts to happen.
That's when people panic, for sure.
Well,
and the problem is retail people don't see that. People don't understand it. You have to be at a higher level to be on a trading desk to realize that and that's when real money gets nervous. And
because real money is also levered to that. and they have a lot more. There's a lot more leverage in that market, and it's a lot scarier when it starts to go no bid. And I think I told you Monday or Tuesday, I said something like I had some credit trades, and I was like, there is no bid. This stuff has gone no bid. And that was when I knew that there was big problems in the system, because when that happens, eventually it's going to cause the whole system to seize up. Yeah. And I still go back to the Federal Reserve, like, I'm going to use the F word. They fucked this up so bad. Think about this, Patrick. I go back.
You're only mad because you lost.
No, I lost because I keep assuming that they might actually be proactive in some way. I wrote, you know what's funny about this, Patrick? I wrote a piece. It was 2 weeks ago, 2.5 weeks ago, maybe, saying something to the effect that the Federal Reserve should cut rates and get out ahead of this. You should have seen the emails I got from serious guys about how I was high, that I thought that basically the Federal Reserve was going to cut before the economic data came. And I was like, what do you guys need to see economic data for? People are shutting down. The economy is stopping. Go out and get ahead of this. And I remember saying you've got to get ahead of it. And I should have understood that they would fall down as hard as they did. Yeah. And I guess I just assumed that there was more people had kind of figured out more than they had. Anyways, I just think that the Federal Reserve, bunch of jokers, that they couldn't see this.
Let's move on. You're in a ranting mood today. We're gonna have
I
to
am in a ranting mood. Yeah. Okay, right, go on. Sorry.
So just very quickly, crude oil. What a historic gap from basically it was trading just at the start of February. At near $55, more than 55, and basically collapses a 50% wipeout in crude oil from top to bottom in just over a month. Just a historic crash on the downside. Do you think the bottom is in? Is that like not a bad tick, but do you think we retest down in the 20s, or was that just someone that had to puke it out and that we're not going much lower?
So Patrick, I don't know. I would have never, ever in a million years expected Russia and Saudi Arabia to do this. So at this point, I feel like I should be cut off from being allowed to actually.
All right, you're cut off.
Okay,
so
but what do you think, Patrick? Well,
I think we backfill into the high 30s. But then we're going to retest down into the 30s. Oil's going to stay in the gutter for many months, but after that, it might be one of the most epic buying opportunities of all time. Like, I mean, it's going to be the equivalent of Bank of America buying it at $5 in 2009-10. Like, it's going to be super cheap, but it's too early. If you buy it, long as you buy it and just forget that you own it, that's one thing. But realistically, it's not going up anytime soon. I mean, you're going to get a reaction higher as it approaches 38. There's going to be some bids, but I think that it's going to be a very tough first half of the year. After that, it might be really interesting. But let's find
one second. Can I say one last thing about crude oil? I think people are underestimating the instability in the Middle East. And, the MBS went, and the rumor is that King Solomon is dead, and that he went in and arrested all of his uncles, and he's in this big power play, and he's doing this stunt. I worry that the chance of something happening and there being a full-out war in the Middle East is higher than the market understands. And although I understand, could see your scenario playing out, I could equally see this stuff just going bananas and it being right back to $60 in the event of a war. Yeah. And so be careful on both sides is all I would say.
Let's leave it with gold and gold miners and silver, just like a pretty strong reversal. And we basically ticked up to 1,700, which was the upper boundary of many of my targets. But the selling was pretty intense. Now, I mean, yes, Tony's right, where there's liquidity things where when everyone's getting margin called, they'll sell whatever they can get their hands on to get cash, right? And so gold is selling. The fact that we are toying with breaking down below 1550 on gold, it makes me it makes it like that this could be actually a swing high. I mean, we could when that kind of price action to me is saying a multi-month correction. And when you look at a stock like you take silver, right? Hold on. I'll just use
SI.
Sorry, that was my bad. I'm just blanking out. And so you have this breakdown, breaks to a lower low after failing to participate on the upside, just not participating. And then you look at like GDX, like the gold miners. They're just what a devastating crash.
Yeah, well, gold stocks are gold stocks. They become stocks when in this environment.
No, but it happened in 2 days. Like they were holding up just fine, and then they just get blasted on an intraday 17 print.
So Patrick, I'm hesitant to get too upset about bad quotes on stuff because I think there was some epic unwinds in the hedge fund industry. And I think that especially something like GDX, you could see a situation where that's right back up to $25-$30. I'm not going to go look at that and say, oh, this is a tick and therefore, this is the start of a new trend. Maybe that's bad, but I think that a lot of this was just liquidation, dumb things happening. Like, here's something you talk about. This is probably a good thing to talk about. So, Patrick, we're talking about liquidation, and one of the things that I think that is kind of interesting is TLT. Let's have a look at the trading of this over this past week. And if you look at the end of every day, you'll notice a very, very kind of repeatable pattern. You'll see that every day there was weakness. And all you need to do was look at the closing, and you could see that somebody was getting liquidated out of this. It always happened at 3 o'clock to 4 o'clock. And it was really, really interesting. Like, go pull up the dailies and look at what happened. Oftentimes, what you would see was action when everyone would be running to treasuries, and then kind of in the afternoon they would sell off hard. And that was somebody big that had a position on in treasuries, as a hedge that was being forced to liquidate. Wow. And this is the issue that we're getting, is that we're getting a lot of unwinds in large macro type funds. And some of these moves are happening there's not enough liquidity on the other side. And we're getting some really crazy prices and some really crazy kind of ticks. And so, the GDX, yes, maybe it's the start of a new trend, and maybe this signifies that everything is screwed and that these things are headed a lot lower. But maybe we'll look back, and that's going to be a period when there was an opportunity to buy more. And somebody might say, well, there's no such thing as a bad tick. This wasn't just a tick. This was some full-on panic selling of size. And this is the thing I'd like to kind of make sure people understand, is that this kind of panic selling, it wasn't a bunch of retail people doing this. These were large.
This is big money.
Big money. And, I saw this in Canada, and we started to see stuff at the end of the day. One of those days that was really brutal, it was actually Canada was hanging in there. And then in the last hour, it went no bid. And then in the last 10 minutes, it went down 3 or 4%, like the whole index. So what that says to me is it was somebody who's big was just like, just get me out of Canada. And, we talked about this a little bit with the oil. But this is what happened. There was some hedge funds that had large positions, and when the Saudi kind of Russian news hit, they just said, "Get me out of Canada." And one last thing, Patrick. Let's do talking charts. Go pull up some pipelines. Like, did you see the damage in some of these Pembina pipe, like PPL? Pull that up. Have a look at this. This was like these things were crazy. These are kind of companies that should have stable cash flows that don't move around. This stock went from $50, it traded down to $25 today. This is absolutely nuts.
I feel for it because when I see when I think of like a REIT or a Pembina pipeline, I know that there are mom and pops that own this stuff because it's supposed to be blue chip and provide them a stable thing. And the fact that this happens to like a Pembina,
yeah,
that's like,
so Patrick, one second.
There are some people that are hurt.
Oh, Patrick, for sure. And you know what? One of the things that everyone needs to remember for the Bears out there, I'm glad you guys won. Even the people on the bull side of the bond market, good for you guys. Great. I won't.
I
It's
hate
not
when you
me.
say it like that. I hate.
No. But 1 second. We've talked about this before, Patrick, because there's some guys out there that have been really bearish that are taking victory laps that are a little too large. And you know what? I'm okay. Like, I'm going to be fine. There's no issues at all. Like, I didn't have the greatest week, but it's not like this is going to affect me in the long run. I'm good. But there's some people out there that have been really, really hurt. There's people that have been wiped out, that they're going to have to work longer and stuff like that.
See,
And that you might say to yourself, well, they deserve that. They were taking too much risk. That could be. I'm not justifying what they did. I'm just saying, be careful when you dance on their graves. And the same with the Bulls.
no,
Don't get me
it's
wrong.
not cool to do that.
It's not cool for the Bulls either. When the Bulls make fun of the Bears, I don't think it's cool either. One of the things about when there's this sort of volatility, there's going to be winners and losers on both sides. And the larger the volatility, the more extreme the damage on either side.
Yeah.
So just always be aware of that.
So, Kev, what I learned it from my favorite book, from Reminiscences of a Stock Operator, and it really comes down to, it's not about being bullish or bearish. It's about understanding the market and trying to be right. It's about trying to understand where are the risks, where's the asymmetry, and putting yourself always in a position to where you have the opportunity to profit from where the imbalances in the market are, right? And so I never like to look at it from as a bear, take a victory lap. It's just the bear trade made sense at the time. There's going to be a point in a few months where being bearish is going to be the stupidest idea out there. Everything's going to be so stupid cheap, and the worst is going to be behind it.
You and I,
being long the market is going to be the absolute no-brainer. To me, I just want to understand the market and make the best decision from an asymmetrical perspective as to when the opportunity presents itself, right?
Yeah, no, completely agree. Patrick, both you and I have flipped to both sides. Like, there's been times I've been bullish, bearish. There's times we've both been bullish, both been bearish. And we try to trade this and make, use the opportunities to make money. And that's what we're trying to do for a living. I'm just want to remind those that are out there and that almost have a religion, and that those who have done well, just be aware that there's other people that are hurting, and that's fine. I'm not trying to take anything away from you guys. You guys called it great, and as well, bond market, good for you guys. You guys did terrific. I'm happy that you guys did so well. Terrific. For me, it would never work. I wouldn't take that trade. And that's just me. I just won't.
Because you have a mental block. You have a mental block. You cannot be neutral.
I might have a mental block.
You do. But anyway, we're not. This is not a trading couch session.
Right.
Because we should do a trading set. We're doing a trading couch session.
But anyways,
your bond problem.
Yeah, we should. We'll do it someday. We'll do it. Anyways, that's been talking charts. Let's go on to the top 3 things to watch next week.
Right. So we start off with a review of last week, and boy, did we absolutely ask the right questions.
Oh my God, that's unusual.
No, and it's rare. And
it is
we
rare.
often are completely like, what were we thinking? But think about this. So
Patrick, it's like we like our steaks. It's extremely rare. Okay. So number 3, is the floodgate now open on the oil to the 2016 low? Did we say that before? Oh yeah, because we said that when Russia said that, and then we didn't know
it was Friday.
Yeah, we didn't know about Saudi Arabia.
We did not. And so oil was trading up there, and then Monday morning it rips lower. Like we asked this question. Now, it wasn't actionable because we asked it on Friday drinking beers, and then Monday morning it was already happening.
Yeah, but not only that, it wasn't actionable because probably I said something bullish, didn't I?
No, I have no idea. But the point is I asked the question, is the floodgate open? And it was. But the moves. The move is now almost over. We're gonna probably retest the low, but the carnage is when you see energy ETFs wiping 50% in a couple weeks. Or more than that, even in some cases. You know that majority of the damage has already happened. Anyway, so number 2, we talked about the ECB. This is where you were already talking about the fact that they didn't cut, and you were happy about that, right?
Yeah. So do you want to go over it? Do you want me to just talk a little bit about it?
Do it, for sure. Okay. But quickly, but don't do 20-minute.
Don't do one of my rants? Okay.
No.
So the ECB, my main kind of pushback on them has been the idea that these PhD economists think that the lower the rate, the better the economy will be, even as it goes more and more negative. I've been arguing for quite some time that as it goes to negative, they're actually hurting their economy with every single cut they do. They are just so friggin' brain dead that they've been going this way and continuing to do it. And Madame Lagarde got in there, and I am so proud of her. She went in a...
Are you going to cry? Like, it's so proud?
No, she's like... You know what? People shit all over her. You won't catch me doing anything like that because I think she's awesome. She went and instead of lowering rates, she said, nope, we're not lowering rates. What we're going to do is we're going to provide more credit and we're going to basically create more quantity as opposed to the price. And not only that, she gave the politicians a hard time and kind of encouraged them.
And Germany's going to spend, buddy.
And to do fiscal. And Germany's going to do fiscal. I am hopeful, Patrick, from my lips to God's ears, that this was the turning point in European financial idiocracy. Because that's what it's like, idiocracy. Like, it's been absolutely insane.
I just don't think you could turn around that easily. But anyway, it is definitely a turning point. I'm not going to take that away from you.
Okay.
I'm not going to push back on that. So number 1, we asked, will we see the blow-off low in the market last week? And I think we did.
Shit. I was going to say something, Patrick, but after the fact that both you and I said that we had seen the blow-off top in the bond market and it proceeded to then go absolutely bonkers, I am going to keep my mouth shut. I refuse to comment on number 1.
All right. You know what? Okay, I'm going to say nothing else. Let's not goocher it.
Yeah, let's not goocher it.
Time to do the top 3 things to watch next week. And the first thing we need to talk about is this dollar. And I know that you were kind of taking a little bit more of a neutral position on this, but what a swing in the dollar index. This is the Dixie here. And look at this thing just rip almost back to 99. Like, this is unbelievable V swing. Like, normally markets don't do such extraordinary swings, and it's just amazing. Like, do you think, I'm going to put this on a weekly chart just to kind of zoom out, but like in your mind, is there what's your thinking? I mean, I think the dollar, I'm still dollar bull. That's my bias.
So, Patrick, I think there's a chance that we go back to the old trade, which is dollar up, U.S. stocks up, and that kind of pattern continues. And maybe I'm hoping that more than I'm, predicting it. But I definitely wouldn't be shorting the dollar in here. I think that the dollar move has already been done on the downside, and the fact that it bounced so hard, I think a grind higher is the most likely possible,
right.
Move from here.
All right, I agree. So number 2, now it's almost a given that the Fed is cutting, like the markets.
Oh no, Patrick, it's beyond a given. Yeah, the real question is it 50 or 100?
Yeah.
So just so you know, Goldman Sachs was calling for 100.
Really?
A move right down. Yep, Goldman Sachs called for 100. We have they're basically saying we go right down to 0. And or basically 0, like 0 to 25 or whatever it is. I don't know whether that's going to be the case. I don't know how the market's going to handle it. I don't know.
It's never about the cut. It's about the way the market reacts to it. That's the most important. And this is why I specifically added the word reaction to it, because it's clear they're going to cut. And they're going to cut a lot.
For sure.
And interest rates are going to 0. Whether they do it in one foul swoop or whether it takes a couple meetings, they are going to 0. I feel that that's a pretty good given at this moment. But by the way, to kind of change that as well, not only the reaction of the market to that, but do you think that steepens the curve? I mean, it started steepening.
Yes. I think the steepener is going to go from here because we finally have the sort of credit.
But the tips got hammered
Oh, geez, yeah. Don't tell me about it, Patrick.
Yeah. Okay. I won't mention it. But at the same time, like we had exactly they're steepening on these curves, right? And
yeah,
and even the
but Patrick,
Canadian
let's
look
go
at
back.
this is the 2s10s in Canada. I mean, we are actually steepening. Remember that,
Patrick? But this is good, Patrick. We wanted steeper. The last thing we want is the bond market.
Oh, I agree.
Well, yeah, we don't want people rushing into the 30-year bond because they're convinced that the zombie apocalypse, I can't even speak, is upon us, right?
Yeah.
Like, we don't want that, Patrick. We want the curve. We want people wanting credit, and then we want it to be such that people are, confident that we're going to get inflation on the other side, and then it doesn't make any sense for to buy a 30-year at 1%.
Yeah.
And so this is the thing: is that we want the curve steepener. That's the best thing that could happen. And Patrick, here's my call: we're not going to get 100 like Goldman thinks. We're going to get 50. And the Fed realizes that the quantity of money is more important than the price. And this is the new way central banks are. They're going to understand that they can't do everything by cutting prices to zero, and that they're better off focusing on the quantity.
Well, it's just the nature of where we are in the macro space with so much credit in the system that it's not. There's more to it than just adjusting the rate. But the point is, the steepener is on. But do you think look? It's already baked in. So do you have a comment on what you think will be the reaction of the markets to it?
You mean like the stock markets?
Yeah. Nothing.
I don't think it's gonna there's.
It's baked in. It's baked in. It's not.
It's baked. No, but Patrick, well, the question is there's 100 baked in, and if they go 50, is that going to be a disappointment? I don't think it matters. So I contend. Look for two things that's more important than the FOMC. Look for fiscal responses and look for the availability of credit in terms of how much the Fed is pushing into the system. It could be that it matters more about their quantitative easing program.
Yeah.
Those things could matter a lot more than the actual rate cut.
So I number one, I chose, is there going to be a market bounce next week? I did this at 3 p.m. because we have to do it before the show starts. And then the face-ripping rally starts literally after I type this in, and 100 S&P points happens like faster than you could blink on the upside, and so there's a bounce that's clearly already underway. But it's a question is, how sustainable is it? How high does it go? Now you can.
Trump saved us.
Yeah, I mean.
Trump saved us, bud.
But
no, listen.
I've been telling my members that all week. I said the market is so oversold. It's just one either Trump tweet or Mnuchin something or Powell something. It's just one trigger away from a reaction the other way. Like it just so happened to be Trump. It didn't have to be Trump, but the market needed a reason for the sentiment to shift on the very short term from a very oversold to, my God, this is an amazing buying opportunity, and everyone just buys the dip, right?
Patrick, I'm going to give you what I think is the most kind of wise thing that I wrote this week, which isn't very much.
All right.
I think when the government finally starts panicking, markets can stop panicking. And this has been my complaint all along, is that the governments have been reacting instead of getting out ahead. And I think that today and yesterday was the start of the governments actually showing that they understand how serious the problem is.
Right.
And now the markets can be a little more kind of comfortable that they're on top of the problem. And this has been the issue. And so if you think that that's the case, then there's a good chance that we go higher. I will leave you with one last thing about the coronavirus. I completely agree with the virus truthers that this is going to get a lot worse going forward. We are going to have a lot more people in the hospital. But now that we're seeing schools closing, like I don't know if this happened everywhere in Canada, in Ontario, in Toronto, basically all the schools have been put on hold until for the next month. We see that the Prime Minister has told the Canadians not to travel. Everything is getting slowed down and locked down. And the idea of that is to not stop the virus, but just to make it so the healthcare system can handle what we're going to expect. And this has been the problem. Up until this point, the virus truthers were basically correct in saying that the more that we get together in kind of big gatherings, the more chance that we're going to have a massive outbreak. And now that the governments have realized this and understood this, I think that we can get into a situation where the market can start to discount the pain that we're going to feel and start looking forward.
All right, so let me tell you my little pushback on you. Well, first, it's not a pushback. I just think that you're being too fancy. The fact is the market is stupid oversold, and it needed a reason to rally. And just like in bear market rallies of the past, the intensity of bear market rallies are far more intense on the upside than normal bull markets. And you're going to get the reaction on the upside, and the market is going to pause. And if this is truly a bear market, the next major leg lower is not going to be about the coronavirus, but rather about the massive damage that's been done to the economy and some sort of unintended consequences that market has not accounted for, credit defaults, spikes in unemployment. Who knows what it will end up being? But if this is a prolonged bear market, it's not going to be the corona that's going to be driving the next leg down. It's going to be the fact that someone that started an avalanche down a mountain that is not going to be able to be stopped very easily. What do you think of that?
Patrick, sounds very wise. I won't disagree, and it's hard to argue because it's basically you're anticipating problems that I can't see yet, and maybe that's the case. You're very well could be.
No, but the thing is, I don't know that those problems will exist. But if there is another leg lower, it is not going to be because the coronavirus is getting worse. It's going to be because of what this did. That it created a chain reaction of for instance, if you think back to subprime alone couldn't collapse it, but subprime was like the first domino that created a sequence of events that created the financial crisis, and so the coronavirus itself is probably not going to be the catalyst that will create a 50% wipeout in a bear market that lasts a year. But what if all of these things that had created these chain reactions create an unstable circumstance that simply it's a death spiral that it's impossible to stop? I have no idea. I think though that if there was ever a chance of it, it's now. We're going to bounce. We're probably bouncing up to 2,900. There's going to be more upside on the market for the next couple of weeks, but it could be a shit show into the summer. We'll see.
We'll see.
All right, that's
okay. Well, speaking of shit shows, let's go with some parting wisdom from me.
You do it.
Okay, the 3 things I know to be true. 1, never pull on Superman's cape. 2, don't eat the yellow snow. And number 3, there is no safe arb in a coronavirus crisis. That's my macro tourist parting words of wisdom.
Isn't it amazing how there's that old saying that in a crisis the correlation of all assets goes to 1, right?
Oh my God. And this is a perfect example. And I 100% agree, Patrick. And this is the thing that unfortunately idiots like me need to learn time and time again.
Yeah.
I sat there and I thought to myself, I'm going to buy uranium uranium closed-end fund because uranium is not going to move around very much in a crisis. Well, guess what? Every other hedge fund in the world owned it too. And when they needed to raise cash, they sold it as well.
Yeah.
So really the only one that doesn't, all assets, the correlations go to 1, and the only thing that really saves you is cash.
No,
and that is
being short.
Well, no, but that correlation's -1.
Yeah.
So the reality is that you need basically everything went to 1 or -1, right?
Yeah.
And that's the real point. There was nothing that could really kind of be a subtle changer that helps you. It was all one and the same trade. No matter what, if you were long something that worked, and the same with like bonds, and bonds for the longest time were the negative correlation trade that was -1, but then eventually as well, when the shit really hit the fan, Patrick, they were selling even that. They couldn't even hold on for those.
Yeah.
Anyways, those are some parting words of wisdom.
It's true wisdom. It's true.
It is true wisdom.
Anyway,
so
Go ahead.
So let's try to wrap this up and do this in a little bit of a professional manner.
No, we've been screwing up this whole episode, so it's not. There's nothing professional about this at this point.
Okay, here, I'm going to give it a whirl. Let's give it a whirl. Thank you for spending some time with us. Please visit our site at markethuddle.com to sign up to receive our weekly email that will include a link to the show and the charts that we discussed. Rest assured, we will never clog your email with junk, and we will only send you our weekly letter and updates for our upcoming shows. Make sure you follow us on Twitter at the Market Huddle. And, what else am I supposed to say? Something about you, Patrick. Where can they find you?
You can find me at Patrick Ceresna on Twitter, as well as you can find me at Big Picture Trading. How about you, Kev?
I'm at Kevin Muir, or check out my website at themacrotourist.com.
There you go. But so also, this show is broadcast on both audio as a podcast as well as video on YouTube. So if you're enjoying this as a podcast and you feel like you're missing out on the charts and videos we're referencing, you can register at the markethuddle.com website. And with that email, you go in on the website, make Lena happy, because Lena's really always happy. Right, Lena? Jump on.
Sure.
You're always happy when they register, right?
Oh, of course.
Yeah.
So
I think we changed our website. Lena's taken over and she's fixed it because my abomination. So make sure you go there and have a look at it recently.
There you go.
It's much cleaner and nicer. And don't forget.
To rate us on
tell us what they're supposed to.
Yeah. Lena, do you take over?
Yeah.
Oh, what am
cut
I
us
saying?
off. Put us out of our
Tell our
misery.
I
listeners
just want
what
everybody
to do.
to subscribe to our video,
Right. Okay, there you go.
to our channel.
All right.
Okay, thanks for joining us, and make sure you tune in next week. Lena,
Yes.
what do you got planned for the weekend?
I'm not sure because I'm staying home all weekend, obviously.
Oh, God, you guys are all self-quarantining.
I went to the grocery store yesterday. I have never seen such a frenzy.
Really?
Everything is out.
It's
Everybody was
suburban.
lined up to the end of the aisles. There was a news that came out not too long ago today saying somebody on Queen Street, Loblaws on Queen Street, the grocery store, somebody pulled out a gun because there was a fight over toilet paper.
Come on.
Yeah, I'm not kidding.
Oh, my God, that really bothers me. Guns that really pisses me off.
Yeah. It's
Anyways, we should. You know what? I shouldn't do that. I will annoy some of our gun people. I don't believe that handguns should be legal.
No, listen.
But anyways,
guns are handguns.
But you don't put a gun over toilet paper. That's just wrong.
Just for those who are getting 1 second. For those who are getting mad at me and are thinking, "God damn it, stupid Canadian liberal idiot." I just want you to know that on the other side of our podcast is Patrick Ceresna, gun owner extraordinaire. And to be a gun owner, and not only is he a gun owner extraordinaire, he owns a handgun.
Oh, yeah.
This is in Canada extremely, extremely rare. I thought he was shitting me.
You
when
should
he
come out
first
to the
told me
range
this,
and
because
we'll
that's how
go
few
do
people.
some shooting.
I thought it was
Exactly.
illegal to have handguns in Canada. I thought it was only hunting rifles you could
No,
own.
see, all of you
that's
common
what you
folk are
do.
not allowed, but special privileged individuals such as myself, we have.
You can go and get a special license. It's very hard. Very few people in Canada have.
And the government
So just-
gave Patrick a license to carry
I know,
a handgun?
What the heck were they thinking? Honestly.
What fools.
Yeah. He's not actually allowed to carry it around. Like, it's not like Texas,
Yeah,
like
you have
open
to,
carry or anything.
you have
He
to
has
keep
to
it in
like
the
take
safe
it
or
from
whatever.
his house
Yeah.
to his
To the gun range and
gun
stuff,
range or whatever.
Yeah.
Is
Because
this
we are,
is
after
that what?
all,
Yeah,
like,
but let's be
socialist
realistic. I ain't
crazies
going
here
for
in
fucking
Canada.
toilet paper with a handgun. Like, you know what? I'll
Well,
just
maybe you
take a
should these
shower
days.
after I'm finished, rather than like pull a gun out to get some paper.
Get a bidet.
Yeah, like I'll use Kleenex for God's sake.
God.
You know, just like talk about having an issue. Like out of all things,
People are
you know what?
freaking
If
out.
you told me a year ago and said that, you know what, there's gonna be like some crazy virus and everyone's gonna go nuts in the store, I'm thinking like they're gonna go after pasta, they're gonna go after canned foods, they're gonna go. No, they're
all out too.
after toilet paper. This is like every headline is about toilet paper. You can't eat the shit. Like, you know what? If you're gonna go
Yeah.
and get quarantined,
I know. I would go for steak. Like shit. Like, let's face it. If you're not going to be eating for a while and you want to, that's to me what I'd be
Yeah.
going for.
Yeah, I got
I'd be
chocolate and
fighting
ice
over the
cream.
last steak. Yeah.
right? Like not
Right.
toilet paper. Like honestly, this is just
Yeah.
ridiculous. It's ridiculous.
Yeah.
People are just freaking out. I don't know what the logic was.
But you know what?
With
Grocery
the
stores
hoarding
aren't
of the
closing.
toilet paper.
They just want you to go on public transit, and they don't want you to go to schools or stadiums. But you're going to be able to get groceries.
Patrick, I've been going on public transit. In fact, I've been licking all the subway handrails.
I'm glad I'm not doing this show live with you right now. You know what? You're going to get...
I'm so glad you're on the other side of the
Where are you right now? You're in like
border
Vermont or somewhere? Where are you?
I'm in Vermont.
So you are going to get stranded there, dude. You know what? You're not going. You're now going to be American. You're not coming back. You're not coming back. They're not going to let you cross the border. You've been licking too much handrail.
No, they'll kick him out. They'll be like, "You're not American. You need to get out of here."
Yeah, they're gonna get rid. They're gonna get rid of me.
I don't think. I don't.
Although Vermont is a little lefty, like it is a little lefty.
True.
This is Bernie Sanders' home.
That's true.
They like their guns here though too, so it's not really like Listen, if I'm going to get stuck in the U.S., it's not Vermont. I'm going to drive and I'm going to go to San Diego.
It's a bit of a drive.
I don't care. That's how much I love San Diego. I love it there. I could, geez, if they take me, I'd move there in a heartbeat. But yeah, no, we are going to be stuck. Did you see that our Prime Minister's wife has coronavirus?
Yeah.
That's crazy.
Yep.
Yeah. Good thing that he's not going to have it because they're getting divorced, is all the rumors, by the way.
Because she got the virus?
No, yeah, she got the virus. No, a little inside baseball for those Canadians in the crowd. Our Prime Minister and his wife are on the outs.
Wow.
You didn't know either, Lena?
No. I mean, I've been following American politics more than Canadian politics.
Yeah, I think
obviously.
we also don't. I think one of the things that we do is we don't actually report on it. We just kind of speak about it in hushed tones.
Yeah.
And podcasts.
But are you guys going to be okay to stay inside for like an extended period of time if you had to? Like Italy, it's like everything's desolate, everybody's staying home. So are you guys
the ski
prepared
hills
if you guys
empty,
have to
Kev?
stay home?
The ski conditions are terrible. So no, it's not terrible. Listen,
you haven't left the
I
machine. You and the machine have been attached at the hip, right?
Yeah, well, I just got here last night, to be fair. So it's not like I've been staring at the market. Well, I stared at the market a little bit. I stared at the last hour today. I couldn't believe what I saw. But no, I think we're doing the right things. I think we're on the right steps and keeping people home. Anyone that can keep home, great. And listen, I'm a wasp. I kind of like social distance anyways.
Yeah,
people too close to me and touching kind of makes me feel uncomfortable.
Until you start licking
so
the
Kind
subway.
of excited, yeah, I was just kidding about that.
You
Patrick,
don't do it.
I was kind of laughing. Although the one thing I will say that a little part of me, like this idea, like I have some friends, like one of my best friends, he's Asian, and he says to me, I'm so happy that one of the kind of side effects of this might be getting rid of handshakes. And I said, like, yeah, I get it. And he's also a millennial, so he's an engineer. So all these things together, he kind of says, why do a handshake? It doesn't really accomplish much. It introduces the potential to spread germs. It's blah, blah, blah. So he just kind of looks at it logically and says it's stupid. And I kind of think to myself, yeah, he's correct when you think about it logically, but there's just a part of me that goes, it just doesn't feel right to not do it. So I'm just kind of like, I realize I'm become one of those old men that is basically arguing stuff by saying it's just not right if you don't do it that way with no real logic to kind of back it up.
You can do the Asian thing and bow to each other instead.
I'm a handshake fist. I hug guy. I get all emotional to people. When you're a bud,
Patrick,
I get close.
You know this whole like virus apparently came from like bats and snakes or whatever, or like people eating bat soup or something in China. It made me think of Patrick eating
squirrel soup. Squirrel soup.
You can't do that shit anymore.
Yeah, that's true. If there's something we've learned out of this, it's that Patrick has to stop eating squirrels.
Stop eating wild animals.
I promise I will stop. Because to be honest, it didn't taste good, and it's not on my to-do list anymore. Trust me. It was a hunter rule. Like I shot the squirrel. Now you kill what you eat, or you eat what you kill. Like you know what
you kill
what you eat. Yes.
No,
the other end. Yes.
Is you know what? if I shot it, I'm not gonna just leave it there. I'm gonna and so
I agree.
So,
yeah, no. So I respect that.
But why did you shoot it in the first place?
I had anger.
That is
I had
story.
I couldn't. Yeah. Anyway, don't worry about it.
He also applies it to people, so if he shoots any people, he has to eat them. Jeffrey Dahmer style. You know what? The world would be a better place because I think a lot of people would stop shooting people if they had to eat them afterwards.
Yeah, the crime rate would immediately go down.
Like, I'm really mad at that guy that just cut me off in traffic, but I'm not going to shoot him because then I have to eat him.
Yeah, it doesn't work well for gun lovers that are vegans.
No.
That's right. Gun lovers.
All right.
I don't know how many gun-loving vegans there are. I would call that a very low demographic.
Yeah.
Okay. Well, listen, guys, stay safe. Sounds like both of you are huddled into your kind of cocoons in your quarantine, self-quarantining. I'm not really.
Yeah, you're.
It's hashtag stay the fuck home.
You would have been doing the same if your wife didn't already have booked this trip, right? Admit it.
No, actually, to tell you the truth, it was supposed to be my son and I, and my wife was supposed to go with my daughter because they were having a trip in Bahamas, and they canceled at the last minute, so it's all of us now. But no, Patrick, I'm going into work until they tell me not to. I can actually walk from. I live just outside downtown, so I can walk to downtown. I'm gonna be the last guy that stops going downtown, and I'm gonna get it. Listen, we have a dead pool on our trading desk. And I'm right at the top.
Oh my god!
I'll take that bet. You're the first one to get it.
Because you know what? It's like the market gods. If you start tempting it, I'm like, I'm gonna get this fucking thing. I know it. It's gonna kill me. I'm gonna be that 0.5. I'm gonna talk about the odds, and then it's
don't goocher it. Don't even say anything. Just shut your mouth.
It's okay. You find a new host. It's no big deal. You'll find someone new.
It's not worth going on.
I mean, we're laughing about it now, but
okay, let's stop joking
safe, right?
Yeah. Well, you know what? To be fair, I should.
There are people out there
one of the
that are
things
going to be influenced by this, and we shouldn't be making fun of it. But it's.
Well,
you think we have that much of an influence?
No, they're not going to be influenced by that. I don't want to say. I never want to take. And you're absolutely correct that. Even one of the points I made in one of my posts this week was that you can talk about the odds and you might say, oh, there's only a 0.1 chance of a child dying or something. But if it's your child, it's absolutely devastating, and there's nothing worse than the loss of the life of a child. And then even if it's a grandparent or, loss of any life is really sad. So although we kind of joke about it, I'm only joking about myself dying, not about other people. I never want to make light of anyone else's pain and suffering, and it's true. And
nice save, Kev. Nice save.
And hopefully it's only me that's gonna be.
Yeah, we're all kind of hoping that as well. It's just you.
Yeah, for sure. That's right. And you guys can play this at my eulogy.
Done.
Or as the guy from Zoolander says, Ugly.
Ugalizer.
I want to do the ukulele.
Patrick,
I want to do the ukulele for you.
Okay, you're on, buddy. You can do it. You can do my ukulele.
All right.
Okay, on that note, everyone.
Okay, cheers, everyone.
Have a good weekend.
Okay, bye.